Okay, so today we are going to study uh, sources of finance for redemption of debentures. Now, you have already seen in the previous lecture that debentures have to be redeemed after a particular period of time. Now, when we are redeeming the debentures, what happens is suddenly there is a flow of money going out from your company to the debenture holder's pocket. So basically, how do you finance the redemption of debenture is what we are going to study. And for this, we have to refer to provision of Companies Act 2013. So you can mark this over here. Provisions under the Companies Act 2013. Now, how do we basically finance is now you can see over here there are three sources given that amount required for redemption of debenture may be managed by a company from the following sources. So which are the sources? First is redemption of debentures from fresh issue of shares and debenture. It means what? Ki, I am in need of money because what happens? See, first let's understand that when a company goes for issuing debentures, they are taking funds from general public as a temporary loan for 5 years, 7 years, so on. Now, the moment the money comes in, company has a plan to utilize the money. So company invests that money either in plant and machinery or use it for their working capital or for some acquisition. Now what happens? Suddenly after a period of 5 years, they have to return the money. So how do they get that money back? Say for example, okay, you took a loan, you purchased a house, now, after 5 years, you have to pay the full money back to the finance company. So, at that point of time, you are not going to sell your house and pay the money. And that is the same concept over here. So, you are not going to sell those assets and pay. So, what you are going to do, how you are going to finance the redemption of debentures is what we are going to study. Now, first source is from fresh issue of shares or and debentures. So what I do, I come up with new issue of debentures or I come up with new issue of shares. I take money from the public and then use that fund to redeem the old debentures. Second is redemption of debenture out of capital. Yani when I'm not having any new source of money. What I'm doing from the existing capital, existing funds, what I'm having, I will redeem. And third is redemption out of profit. Now, what happens? Every year, company keeps on generating profit. Out of that profit, company keeps aside certain portion as reserves, which is not distributed as dividend to the shareholders. So company has accumulated balance of profit or loss, accumulated balance of reserve. So company will use this money now to pay off the debenture holders. So these are the three sources. So you can highlight this. This is important from understanding point of view. Now, over here, let's go to the second one directly because from proceed of fresh issue or debentures, we know it's a very simple thing. We collect money and then we pay that money to the old debenture holders. But let's come to the second point, which is important, and this will be useful even in the sums. When no profits are set aside for redemption of debentures, it is called redemption out of capital. So we are not having any profit or anything kept aside. We are using our current funds. That is why it is out of capital. Capital means amount which is there in the business bought in by the owners, the shareholders. But according to Section 71(4) of the Companies Act 2013, and as per SEBI, which is Securities and Exchange Board of India, guidelines requiring creation of, we have to create over here, creation of very important debenture redemption reserve account. So this is very important. You highlight this debenture redemption reserve account. Equivalent to how much you have to create debenture redemption reserve? Equivalent to 25% of the total face value of how much? At least 25% of the total face value of issued debentures before the redemption commences. It means if you have 10 lakh worth of debentures and at least 2 lakh 50,000 you have to transfer to debenture redemption reserve account. We'll see when we see the entries how exactly we do this. This amount is transferred from surplus in the statement of profit and loss. So out of our statement of profit and loss, from the profit, we transfer 25% of what? Of the face value of issued debentures. So full amount of redemption of debenture is not purely out of capital, but balance amount payable from capital of the company after compliance of the above provision. Now, coming to the third one, redemption of debentures out of profits. So here we are going to see redemption of debentures out of profit. Now, redemption out of profit means provision for an amount equal to debentures issued is transferred from surplus or in statement of profit and loss by the company. This provision is to be executed before redemption commences. Now, for this, company has to create new debenture redemption reserve account. So, when we are redeeming out of a profit, then the total amount or amount equal to the debentures issued, that amount which we are going to redeem will be transferred to debenture redemption reserve account from where? From surplus, यानी जो हमारे पास profit है, surplus in the statement of profit and loss, in which required full amount of redemption of debenture is transferred from surplus in the statement of profit and loss to debenture redemption reserve account. Due to this effect, company reduces the amount of profit available for dividend and it is used for redemption of debenture. This amount is not payable for payment of dividend. Thus, existing liquid resources of the company are not affected by redemption of debentures. So please mark all these things for theory and knowledge purpose. And now let's go to the next page, that is page number 94. So from entry point of view, important points are given over here as per the SEBI guidelines. We have to mark them. Now, creation of debenture redemption reserve is obligatory only for non-convertible debentures and non-convertible portion of partly convertible debenture. Now, important point number two, a company shall create debenture redemption reserve equivalent to at least 25% of the amount of debentures issued before starting the redemption of debenture. But over here, following categories are exempt. कौन exempt है? Financial institutes regulated by Reserve Bank of India, other financial institutes regulated by Reserve Bank of India, banking companies, both public as well as privately placed debenture, and housing finance companies registered with National Housing Bank. Now, this is given for your understanding. It is not expected in your exam, but you should know this that generally for finance companies and banks, we need not provide for debenture redemption reserve. Now, where is this balance shown? We are going to see very soon when we do company final accounts that balance of debenture redemption reserve is shown on the equity and liabilities part of balance sheet under the head reserves and surplus. Now, what happens when the debentures are redeemed? Yani we gave the money back to the debenture holders. When all debentures have been redeemed, Then debenture redemption reserve account is closed by transferring the amount to general reserve account. So this is an important entry. We have to do it at the end. So let's proceed now. So far, what we have seen is creation of redemption of debenture redemption reserve account. Now, that is 25%. Please remember this in your mind. Now, let's go for debenture redemption investment. So, there is one more clause of Companies Act which says that the company required to deposit or invest a sum which is which shall not be less than 15% of the total face value of the debentures to be redeemed at the end of the year. So, for example, if you have to redeem 10 lakh, then minimum 15%, that is 1 lakh 50,000, you have to invest. And this for this we use the account which is known as debenture redemption investment account. But the important point over here is when should we invest? It should be invested during the year ending on 31st March on or before 30th April, that is beginning of the year in which the redemption is going to take place. So please mark this. Now, this amount what we are investing, we have to use it only for the purpose of repayment of debentures. Now, where can we invest them? They can be invested in all of these. So any deposit in any scheduled bank free for from any charge, free from any charge का मतलब है it should not be mortgaged somewhere unencumbered या unencumbered यानी उसके ऊपर भी कोई mortgage या किसी और का right नहीं होना चाहिए central government, state government securities. In short, this amount we have to invest in secured securities. You can't invest this money in stock market कि चलो market ऊपर 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 है उधर पैसा इन्वेस्ट कर दो बहुत रिटर्न मिलेगा नो दैट इज नॉट allowed. So these are the theoretical points which you have to keep in mind. Now, how do you redeem the debentures? The method of redemption of debentures are as under lump sum payment at the end of fixed year, payment in installment by drawing lots. Yani if I want to redeem every year one fifth, so who will be those one fifth? So we draw lots. Yani we select randomly के इतने लोगों को we give the money back. Then third and fourth, purchase of own debenture in the open market. Now I have surplus funds. I don't want to wait. Instead of investing this fund somewhere else, I am buying my own debentures from the market. Okay, and then I'm canceling those debentures or keeping it as a investment. And fourth, by conversion into shares. So these are the four ways we can redeem the debentures. Now, first method, what we are going to see is lump sum payment method at the end of fixed period. So take out your notebooks, write the heading, redemption.
420 थवा आया
Okay, start writing redemption of debenture. Now, first method, what we are going to see is lump sum payment at the end of fixed period. In this, we are going to see first one, out of capital. Now let's write the entry. First entry at the beginning of financial year. Now which financial year? Financial year in which the redemption is going to take place. So at the beginning of financial year up to 30th April, important date. Now in this first entry we are going to pass is debenture, redemption, investment account, debit to bank account. Now, how much? This will be minimum or at least 15% of face value of debentures to be redeemed. So this will be the first entry. Now what happens? This is up to 30th April. We have to do the investment. Second one. Now this is up to 30th April. We have to do the investment. Now what next? At the time of redemption. So now time has come that we have to pay back the money. So at the time of redemption, what we need to do is at the time of redemption, first thing is we sell these investments. So bank account debit to debenture, redemption, investment account. So first entry is we sell them. Please write this. Now go to the second entry. So second entry is we have to transfer the amount to debenture reserve, redemption reserve. How much? 25%. So transfer to reserve. Write the heading. So we create reserve by transferring from our surplus of statement of profit or loss. So surplus in statement of profit and loss account, debit to debenture, redemption, reserve account. Now how much we have to create reserve for? We have to create reserve for at least or minimum 25% of face value of debentures redeemed. Now third one, on redemption, you know the entry for redemption of debentures. So similar entry, first percentage debentures account debit to debenture holders, and second debenture holder account debit to bank account. So now we are paying the money back to debenture holder. But fourth is important. What about this debenture redemption reserve? This balance of debenture redemption reserve will be transferred to general reserve. So when all debentures are redeemed, we will transfer debenture redemption reserve account to general reserve. Please don't forget this entry. Whatever is the balance of debenture redemption reserve. So these are the standard entries when we are redeeming out of capital. Now we'll be doing illustration number 1919, page number 97. Please come to page number 97. Now, illustration 19, Nirja Limited issued 7 rupees 7 lakh 9% debentures of 100 each on 1st April 2013 at a premium of 5%, so at a premium of rupees 5, which were redeemable at a premium of rupees 10, at a premium of 10%, so rupees 10. So we are collecting basically 105, but we have to pay back 110. According to provision of Companies Act, the required investment. So what is the required investment? It is 15% of the face value of debentures to be redeemed. Okay, where we have done this in 8% government securities on 30th April of the financial year in which redemption is due. Debentures were redeemed on the due date. Past journal entries at the time of issue and redemption of debentures in the books of the company. You also have to prepare debenture redemption investment account and debenture redemption reserve account, which you have to do as your homework. Now, let's write the heading and let's start the sum. Now, first we have to pass the entry for issue. So, 1st April 2030. Now, as you know, here we are going for lump sum. Okay, amount of a debenture is to be paid at one go. So, bank account debit. Now, debentures of rupees 7 lakh. So, 7,000 debentures into rupees 105 because they are issued at a premium. So 7,000 into 105. 7,35,000 to debenture application and allotment account. 7,35,000. Close it. Next. Again 1/4/2013 debenture application and allotment account. Debit. Now over here we have to pay back rupees 110. So 10 is our loss because we have committed this amount to the debenture holder at the time of issue of debenture. So loss on issue of debentures. Let me write in bracket the amount. 7,000 debentures into rupees 10 is the loss. So 70,000 to what percent debentures? 9% debentures. Debentures account 7,000 debentures into face value rupees 100. Debentures always with the face value. So 7 lakh. To securities premium reserve account. So 7,000 debentures into rupees 5 per debenture is the premium on issue. So 35,000 and 2 premium on redemption of debenture 7,000 into rupees 10 70,000. So very important entry. I'll explain it once again to you. Now, debenture application and allotment, we debited loss. This loss is what we have committed over here. They are redeemable at a premium of 10%. So I've given this committed, I've given this commitment. So loss is already incurred. So we debit our loss account. Then debentures, we create liability with the face value amount. We issued these debentures at a premium of 5%. So this 5 rupees per debenture will be transferred to security premium reserve account. And then this loss, what we have committed, because we have committed this loss, we have to pay this money in future. So we are creating a liability towards our debenture holders. So premium on redemption of debenture is a liability account. Security premium is a income account. Then 9% debenture long-term liability loss. Okay, it's a loss which we have to write off over a period of over the tenure of the debentures. What we have committed to the debenture holder. So if they are for a tenure of 5 years, every year 1/5 we have to write off. It's a deferred revenue expense. And then debenture application is a temporary account which we have reversed. So this is the entry, very important. Now issue ho gaya. Now these are for how many years? Is it given in the question? Let's check out. They are to be redeemed on 31st March 2018. So for the year 1718, they will be, for the year 1718 is the year in which redemption is going to take place. So what we have to do is on 30th April 30-4-17 for the year 1718, first we have to invest 15% of the face value to debenture redemption investment account. How much? 7,000 debentures into rupees. Sorry, I'll do it over here. How much we have to invest? 7 lakh. Face value, I'll write over here 7 lakh into at least 15%. So account debit. So 7 lakh face value into 15%. It comes to 1 lakh 5,000 to bank. Bank account 1 lakh 5,000. Please be careful here. 15% of the face value of debenture are to be invested. So we create debenture redemption investment account. Now what happens at the time of redemption, that is on 31st March 2018. Before we redeem the debentures, we have to, what we have to do is, first of all, I would like to sell all my investment. Now this investment, what I did was on 30th April 2017, and this investment I write over here in the bracket in 8% government, 8% government securities. It bears 8% rate of interest. So we are also going to get interest when we sell these investments. So first of all, we sell the investment and take the money with us. So bank account debit, how much amount we are going to receive? We are going to receive this 1 lakh 5,000 plus we are also going to receive the interest. So bank account debit, I keep it blank. 2, debenture redemption investment account, 1 lakh 5,000 का investment goes out, and to interest on investment account. Now we will calculate how much, as you know, so I'll write in the bracket 1 lakh 5,000 was the investment into rate of interest is 8% for how many months? Into 11 months divide by 12 months. So please calculate it on a calculator. So 1 lakh 5,000 into 8% divide by 12 into 11, which comes to 7,700. It comes to 7,700. Please check this out, 7,700. So total, how much money we have received? 1 lakh 12,700. 1 lakh 12,700. Next, now we have sold the investment, so always follow the order. Okay, in 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 this date 31/3/18, if order is up and down, it is fine, but as far as possible try to remember the order. The order is very simple. On the day of redemption, first sell the investment and then transfer 25% to debenture redemption reserve account. Now from where? From surplus in statement of profit and loss account. Debit how much we have to transfer 25% of the face value. So in bracket, face value 7 lakh into 25%. So let's calculate 1,75,000 to debenture redemption reserve account. 1,75,000. This is minimum 25% is to be transferred. Now let's redeem the debentures. So we cancel the debentures first. So 9% debenture account debit 7 lakh. They are to be redeemed at a premium. So premium on redemption of debenture. We know 7,000 debenture into 10. So 70,000 to debenture holder 7,70,000. And then let's pay off our liability. Debenture holder account debit to bank account. And then finally, now after we have paid this amount of debenture redemption reserve account, 1,75,000, we have to transfer it to general reserve. So debenture redemption reserve account debit 1,75,000 to general reserve account. But over here, we also have this interest on investment, which will be transferred to profit or and loss. So 31/3/2018, it will be transferred to profit and loss. So interest on investment account debit 7,700 to surplus or directly to statement of profit and loss account. Why we use the word statement is because as per the Companies Act, we prepare a profit and loss account in a statement format and not in a T-shape format as a ledger account, what we used to do when we used to do final accounts of partnership or sole proprietorship. So that's it. Close this and let's do the total and see. Okay, already there's a formula, so it is already done over here. So total comes to 36,55,400. Go through the sum. You have to remember the entries. Okay, the flow. Remember 15% investment and 25% is for debenture redemption reserve. This entry is also very important. This one. This is investment of 15%. This is reserve of 25%. Please finish the sum.